Hello everybody and welcome to Green Star Trading with me Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right then, it's time for a quick look at Bitcoin. We're going to start here on the BLX on the monthly time frame, and the count is the same as it has been for years, and I mean that quite literally. If you go back across the channel, and if you know me outside of YouTube, you'll know that that's been the case for the longest of time that I've been observing this thing. So I believe that we're in a super cycle wave 3, which moves into a smaller cycle wave 3, which moves into a smaller primary wave 3, and we're now currently working our way up in minor degree within the primary 3, looking to find the intermediate degree at a higher level, intermediate degree 1, 2, 3, 4, 5, into that primary 3 of that massive bull market move higher. So yes, Tom has been extremely bullish this whole time and has been waiting for the market to move higher. Now, on the premise, or on the possibility I should say, that all of that is wrong, we also have an alternate count where we look at the support levels where we can move lower. So if we just do that first, because it's all about the small time frame, we're going to come in and have a look, because we've had a really nice little pop recently which fits one of our interpretations. There is a way it could still move lower again within a bullish pattern. The bearish count on the shorter time frame is incredibly close to being invalidated, but that's beside the point. We'll come and have a look at that at the moment. If we just turn off that primary and we look at the alternate idea for a moment, and then we bring up some of our essential support levels, for example the golden ratio, that's in log. If we bring up support levels across the same area, previous price support, previous resistance becomes support, we have a whole series of levels here. If we bring up our target fibs, we get an 89% linear retracement right on top of the 61.8% retracement. We get two one-to-one extensions given the A, the B to the C, and the W, the X to the Y within a larger cycle wave 2 correction. So we have got a huge amount of support down here. We've got our demand zone here, two overlapping points of controls on our fixed range volume profile, showing that this is by far the most dense area of buying we have to fall into, and that's the target zone essentially, which comes in between around 8,000 all the way up to about 12,000, and that is where, if you're going to come down lower, you are likely going to stop in this target box. Right, you are likely going to find buyers in here. Now, that's all still possible, but it's not been the primary, it's always been the alternate. The primary is still bullish, and that is that we've already bottomed in the November low last year, and we've been tracking a bullish count off of the low on the smaller time frame ever since. Now, why is it I favour this bullish count over the bearish one? Well, if we bring up on the longer time frame for a moment, some of our momentum indicators. So the most compelling for me by far is the behavior of the MACD on the monthly time frame. Okay, when we get a significant shift in momentum from bullish to bearish, we've got our little histogram here, and we've got our signal and average lines here. When we get these crosses and shifts into bearish momentum, or a dying of bullish momentum, we get a huge bearish phase, and then we get a cross of signal through the average, and then we start to get a histogram build up of a big bullish phase. Very simplistic, I know, but if we go back and look at all prior examples of bull markets, that bearish breakdown in momentum, that cross into a bearish phase, here's the 2017 bull market, 16-17 bull market, here's the bear market, 2018-19. Okay, there's the COVID low there, bit of a freak occurrence that one, but it still follows the same pattern. Bullish momentum dies off, we shift into a bearish phase in the histogram, we get a crossover, then we get a crossover back above, shift into a bullish phase. If we go back to the bear market of 2014-15, here we get the same bullish phase up, then we get that waning momentum, crossover bearish, then we cross over bullish, and we go into a new bull market. The point is, once we have seen the end of this bearish phase and this crossover, end of this bearish phase and this crossover, end of this bearish phase and this crossover, we now enter a new bullish phase. So it would strike me as very peculiar, having bottomed essentially from a momentum point of view, having exhausted the bears from a momentum point of view, having broken this downward trend on the monthly time frame within the unbalanced volume as well, and swing back to prior highs. We haven't broken them yet, but we're close to doing so. all of this suggests that we've bottomed. Now the same is true here on the RSI. If we look at the long-term trend, each of these bullish phases, as we've extended this ever-expanding super cycle wave degree higher, has hit more extreme bearish conditions in the RSI. But once it's reached those levels, we start a new bullish phase. This would have to break all of that prior behavior and do this, and the same as the MACD would have to roll over again. Now you could make everyone will tell you, obviously on the larger time frame, as such as large as the monthly time frame, that we could have lower momentum readings and not swing lower on price, but that tends to be a suggestion of a bullish phase that is weakening and topping out, rather than a bearish phase which is weakening and bottoming out. If you take my meaning, it's far more likely for that to have been the case. So that's why I lean into the bullish camp. Now, one thing that I will say has caught me a little by surprise at the moment, and we may swing lower again off of here, not to new lows but temporary lows before going higher. There has been some bearishness, but there hasn't been as much as I was hoping to see within a wave 2, because when Twitter, the Twitter sphere and YouTube and the internet in general gets extremely bearish and it's the end of the world and the bears start thinking they're right again, that's normally a strong sign that we're at the lows for the bulls and that we're about to move higher, about to find the bottom. And we only had a marginal retracement here. We never reached extremely or even remotely extremely bearish circumstances in my appraisal. I mean, some people are always ready to jump off the jump out the skyscraper just because things aren't going their way, but for most of us it never really got even remotely perturbing, this pullback. It was just a temporary pullback. Okay, now you could interpret that a couple of ways, and I really do think it's absolutely open to conjecture. You could say, well, it's so bullish, right, that there's no room for that kind of bearishness. Or you could say, well, it's a bit of a head fake and there's a more longer term corrective pattern going on the smaller time frame that isn't being considered. So having said all of that, that's why we're now going to come down in a minute or two and have a look at the smaller time frame, after a quick sip of coffee of course. But let's come back to the weekly first while we're here and have a look at our moving averages for the 60 and the exponential 60 and 250 exponential weekly moving averages. Now we're back above the 60 after breaking back towards the 250, but we never made it to it. Okay, now that's fine. We can see how once we're in an upward trend, it's often the case if we go back and look at the move here in the 2016-17 bull market, we backtest at 60, we don't quite make it to the 250, we move up, backtest to 60, and then we tend to stay above it in that bullish phase. That's quite common. We did the same here in the bull market run up into 2021. So we move up at the 250, we come above the 60, and then we track above it, backtest there, back above it. And if you look at what we're doing more recently, we have moved back above the 250, then above the 60, we're now backtesting it, and now we're probably going to do this, carry on above it. Now we could come back one more time, because depending on the wave degree we're dealing with, we don't know if this is intermediate 1 or minor 1. I'm favouring a more bullish counter, suggesting minor 1, which does seem extremely bullish, because that suggests 5 minor waves into intermediate 1, and then a big pull back into, and then a push up in 3. But time will tell. Either way, I'm bullish. Alright, so, but as I've explained earlier, we have lower targets in case all of this is wrong. If all of this breaks down and it comes down into that range between 8 and 12 grand, we're going to bottom somewhere in there instead. But I'm becoming more and more confident, and I think we have already seen the lows, as I've mentioned before, and we're now moving higher. So on that note, let's come into the smaller time frame and have a look at what we can see. So let's cut to the chase, shall we? As I've mentioned in previous videos, you can get 5 off of a low here. You can get 5 off of a low in a couple of ways. So let's turn off this bearish alternate, we'll come back to that in a moment. Primary count, I've decided, and there is nothing between them, whether you say 1, 2, 3, 4, 5, or whether you say 1, 2, 3, 4, 5, extended 1, shorter 3, shorter 5, or a more traditional extended 3 but very deep 4, which is a back test of the base channel from the bottom of the beginning of wave 1 and the bottom of wave 2. We get the extended out here from the top of wave 1. We get a base channel check for the wave 4. That's some explanation of why it was so deep, but it doesn't cross into wave 1, so it's perfectly legal. It is extended, which is the most typical. It's the longest of the waves, but either way, you take your pick. We can get 5 waves up to the high. Righto. Now, how we get down from there, that's the bit that's up for debate. So, I was expecting, as you can see, a little bit more time correcting. Now, we may still have a bit more time correcting, but the method I was expecting it to do, or the means by which I was expecting it to happen, is now not really possible. It's the same idea, but I think there's a better explanation. So, A, B, C into a W, A, B, C into an X, and then I was thinking A, B, C into a Y, just to try and bring us into this 50, 61.8% retracement zone where we're most likely going to find horizontal support and former buyers and some demand down here, right? And we haven't yet. We've gone higher, and quite impressively so. So we can make this swing a little bit. We can make it work a little bit if we just rejig things a little bit. What we can do is just make sure this is unlocked. We can take our X wave and we can put it to here. Okay, and then we can take this A and this B and this C, move this out of the way, and we can say, well, what if then? Well, I deleted that. Didn't mean to do that. We've had 3 into an A, 3 into a B, and 5 into a C to get an X. And now we're going to get A, B, and C down into this zone. Now this would be a bit of a head fake, this would, wouldn't it? Because we look so bullish here, breaking that downward trend, wanting to go higher. I'm leaning into it being bullish because it just looks bloody bullish at the end of the day. Yeah, I'm just trying to keep options open, alternative ideas open. Maybe because I'm fantasizing about it coming lower and I just want a better buying opportunity. But you know, the market isn't interested in satisfying Tom's greed at the end of the day, if it's going to do what it wants to do. So if it comes down here, you can have A, B, C. Now a better explanation, I feel, would be a flat pattern. So I'm going to save that anyway, but we'll talk about what I feel is now a better explanation. So put that into the primary, save it. So in fib time, we bottom somewhere currently, if this is the bottom, we're putting the low between the 38.2 and the 50% the length of the prior impulse. I would expect to see us come a little bit deeper, but we might not get what I expect, and I think it's now less likely. So what are the alternates? Well, the most obvious alternate is that it's bottomed, right? And I feel giving this the benefit of the doubt as the primary is probably the way to go now for the moment, and I will relabel accordingly or rename them accordingly. Why have I got two? There we go. So all I've done to express this, as I feel there's nothing to separate this, two separate ways of counting this impulse. This is a wave 1, and we've gone A, B, C, W, A, B, C, X, A, B, C, Y, 2. Bottoming out at the 38.2. Excuse me, allergies are playing me up just a little bit. It's just that time of year. And we've come out of here like a rocket. We've gone 1, 2. Maybe we're working on 3 and 4 now. Looking a little triangularly at first glance. I'm not going to waste time nitpicking on a smaller time frame. I'll let it tell me what it's doing when it does it. 1, 2, 3, 4, 5. I think that's definitely looks like a wave 3. Whether it's a C and that's the 3 of a C, or whether this is the 3 of a 1, is what we'll find out. So this would be minute degree. We get a retracement in a 2. Off we go 3, 4, 5 again at minute degree. Okay. Now, actually, sorry, I've got different labelling here, haven't I? What have I done? Minor. So excuse me. That's minute. This is minor. So as you can see, what I've done with the 2 counts, because I'm not sure which they are, I've used the 2 different kinds of impulse into the high, and I've used 2 different wave degrees, intermediate and minor, because I honestly believe it could be either, and I could flip a coin between the two. So I'm just going to keep charting both over time until I think, no, actually that one fits better, and that's the plan. So we come back to boom, we're on our way. We will get 5 more small waves up, and then we'll come back in a deeper 2 again. While deep, who's to say what deep is? 38.2% is apparently deep enough here in crypto. Sometimes we get 98% retracements. You know, there's no telling what you're going to get, but that's quite shallow. We could get a deeper one now, we could get a shallow one again, but we will get a 2, then 3, 4, 5, 1, 2, 3, 4 and 5, so on and so forth, as we work our way up higher and higher and higher. At the wave degree we're working with on the larger time frame, we've got years of bull market ahead of us. Yes, there will be big retracements at the larger wave degrees on the wave 4s again, maybe 30, 40, 50, maybe even 60% retracements, you know, in terms of overall price. But I think the days of the 70, 80s and 90% retracements, I think they're gone, because I think they were all wave 2s, and I think we're just getting out of our final wave 2s now as we progress. So I think, yes, there will be big pullbacks, but we're now into the meat and gravy of this market over the next decade, I feel. So it's all, and if that's true and that's right, then it's all good news at the end of the day for bulls. So that's the bullish scenario. If it's correct, if the short-term count is correct, and we have indeed bottomed here, okay, then we will go 1, 2, and we will just press on higher, and we will just keep going. If it's wrong, however, then we should consider the last ditch effort of the bears to hold the line at the prior high, because that's all they got. That's all we've got at the moment. We can come lower in a bullish alternative, which we'll discuss in a moment, but I feel that the pure bearish count, which a lot of people have been leaning into, is where am I? Excuse me, I'm just getting completely lost. That's the one. So what's this? Where I ended up putting this? In the wrong folder, twerp. There we go. Excuse me. See, this is why you should aim to get more than 4 hours sleep a night. There we go. Right then, so next bullish case is, this is still wave 1 up to here, but this is a head fake. Right, we talked about it being a flat pattern. So we get A, B, C, A. A, B, C, and that's why this looks like an impulse, because it's a C wave. B, A, B, C into B, and then we get 5 down in C. This is what I'm secretly hoping for, because I feel another swing high would be a proper, you know, it would just be the perfect opportunity to trap all the breakout idiots, wouldn't it? Just grab them here, and then, you know, steal all that money off of them, and then head down. Right, giving us a better, deeper buying opportunity that comes later in the day on fib time and fib retracement, giving us the opportunity to buy at a lower price, right? And this wave swing with C should be the bearish phase, where everyone gets really down in the dumps, really depressed, really, oh my god, it's the end of the world, you know, and that's a signal for us to scoop in and buy it, right? So a head fake breakout high would be the perfect opportunity to trap breakout traders up here and then turn on them. But it might be a bit of a fantasy, you know. It might just be Tom wanting things to come down deeper, so I could just buy a bit more Bitcoin at a bit better price. So it's not the primary, it's just a bullish alternate, and I think that's fair enough. Like I said, give something the benefit of the doubt. That looks bullish, that looks like 3 waves, that's 1 into 2. Give it the benefit of the doubt and then see what happens. Finally, we have the bearish alternate, which is hanging on by the skin of its teeth at 31.035. Break 31.035 and sorry to giggle, it's just that this X wave, whether we call it an X or a C, this thing has been moved up by the bulls so flipping by the bears so often over the last 6 months, it's just funny. So this was the prior pivot, and we were going to collapse from here, right? We were going to collapse from here now, right? And not make a new high, but prior to that, making that surprise move up, well, this was the X or the C, and prior to that, this was the X or the C, and prior to that, this was the X or the C, and you can see what's going on, right? Oh, well, that's a flat pattern, so then we're going to do this. Oh, well, that's a flat pattern, so then we're going to do this. oh well, that's a flat pattern, so then we're going to do this. But the fucking thing just keeps going higher and higher and higher. You know, I'm not having a go. It's a perfectly logical way of looking at it. But there's a reason why I always promote, after you come off of a 50, 60, 70, 80% drawdown, there's a reason why I always promote looking at 5 off of the low as bullish rather than bearish. Right? It's just better odds. However, it's still alive. It's not dead yet. So if the best I can make of this, if you want to be impulsive from the high down, you want to be bearish, is you have to look at that as 5. You have to look at this as yet again another flat pattern. ABC, and we will turn around before breaking 3105 and we will rip down here in 3. Okay, and we'll make new lows and off we go to the bearish long-term targets, right? Which I would be perfectly happy with as well, if I'm honest, because I got time, I can wait, I've got no problem buying Bitcoin lower and waiting another couple of years for it to come back. That would suit me perfectly fine. But I don't think that's the case, guys. I think we bottomed, and I've been thinking that for months. So happy to be wrong, but I think we've bottomed, and I'm gonna be bullish and ride it bullishly. So let's sum up then. What's this? Head and shoulders. Another little piece of bearish geometry, which is not held true at the moment. We had this head and shoulders pattern. This neckline was, well, I'm not going to shit on it. It was strong resistance and strong support. There's no doubt about that, but it snapped in a big way when we went back up here. So that's, if you are not into Elliott wave and you just like to trade patterns and you see a break of a neckline which looks bearish, that's what can we call it, a failed pattern. That did not at the moment. It's not dead yet. Like I said, you got to take out that swing high up here, that previous dominant high, then that pattern's dead, but it looks like it's failed. So from a traditional bearish point of view, that looks like it's given up the ghost. So primary count, we are now going to relabel to this, because like I said, after such a strong move, I'd rather give it the benefit of the doubt and be proven wrong than expect lower pricing when the market doesn't look like it wants to give it to me. So this will now be the bullish alternate 1, and we'll move that up. Okay, and that's into the low, so that's just part of the primary, that's fine. Move that to below it then. So primary count is now 1, 2, 3, 4, 5. Like I said, how you get up here doesn't matter. WXY into the 38.2. That's our wave 2, and now we're off on a 3. Okay. A close second to that, where is it? Is the idea that we're now in an expanding flat. So what I'm going to say is swap these over. This is supposed to be brief. This is me being brief. Oh well, I'd rather give a somewhat in-depth explanation of what I'm thinking than rush, but this is me doing my best to be brief. And then finally, hanging in there by the skin of its teeth is the idea that this is all the giant X wave, and we're going lower. So we've had 3 into A, WXY here into B, and then we've had 5 into C for X, and then 1 and 2, very deep 2, and now we're going to implode lower, and we have to, because we can't go 310, can't go through 31035. So we have to implode from here really for this to have any chance of being right. But like I said, this is the ever expanding, bearish count. This is one of the things. Now it might be right. I don't think it is, but it might be right. But there's a lesson here if it's wrong in the long term when we look back, and that lesson is to stop hanging on to an idea which is becoming less and less probable over time. That would be a lesson here. So that's proportionate. that's somewhat proportionate, and when this first showed 5 waves, that looked brilliant. 3, 3, 5. The bears, back at prior high, double top, had every reason, with what looked impulsive movement from a high breaking a swing low, they had every reason to be right. And honestly, they looked like they were probably, in the best circumstances, most likely to be right. Meanwhile, you had me saying, well, yeah, I see their argument and I think they've got like a bloody good point, but I like when I see 5 off of a low and 3 back, I prefer to be bullish, because who knows, that's the smaller margin from where you come down from the high at 70,000. You might as well take this amount of risk than the opposite side. Yeah, and sure enough, we were rewarded. Problem is, at that point, if you're a bear, you try and create this to be the next high. Then you create this to be the next high. And now we've got potentially another high on the horizon. Now, how much longer are you going to hang on to doing this? That's the thing, isn't it? How much longer are you going to keep doing this? So, I'm not saying you have to be bullish. I'm just saying, as the price goes higher and higher and higher, the odds get lower and lower and lower that the bears are right, and you're left wishing you got on in. So, I'm not telling you what to do. I'm just talking from experience. I've done it. I know. I'm never lecturing from a point of arrogance. I'm lecturing from a point of view of painful experience. I've fought the market in the past, been doing this years, and I've gotten hurt as a result. And I've learnt these lessons. So just bear that in mind. If it does come lower, bulls are bulls. They're going to want to buy at lower prices. Okay. But the odds of this particular interpretation, with this recent swing high being correct, well, they're getting smaller and smaller. And if we break that 31035, it's gone completely. And we'll have to, if you want to be a bear at that point, I think your best bet you've got is to try and get into the low impulsively. I'm not sure how, honest to God, I'll have a go at it, but I'm not sure how you get there. And you've got to start thinking, I feel, if you want to persist, of trying to get this whole structure to be corrective. Okay. Anyway, thank you very much, guys, for joining us. I hope that's answered a few questions. So we are still bullish. The primary is that we've had 5 off of a low into a 1. We've come back into a 2. We're now off in a 3. I feel that I can't give it more than... Well, I'm not going to give a percentage on it, to be absolutely honest, at the moment. We'll see how it develops. That's the primary. Alternatively, I feel this is a B swing high and it's a head fake, and we've had 3 into A, 3 into B, and we'll get 5 back. If that happens, buying opportunity in a couple of months' time. Okay, probably around about August, maybe a bit later. Alright then, guys, thank you very much for joining us. If you're new to the channel and you like what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below, and as always, a huge thank you to my Patreon subscribers. Your support is greatly appreciated, especially during these quieter months recently where, like I said, my life circumstances have changed somewhat, and you continue to support me, which is greatly appreciated. But you mustn't feel obligated. You're always welcome. I enjoy listening to your content and enjoy listening to your conversations on the Discord. And if you are interested in joining the Patreon and joining our little group, there's a link in the description box below. Feel free to sign up. It'll give you an opportunity to learn the Elliott Wave course and go through all the educational content there, which I still think has a great deal of value. So take care of yourselves, guys. I'll be back with you as soon as I can. All the best. Bye bye.